Welcome to another episode of Millennial Investing Explained. Here's today's question. In the past, you've written about these 3 crucial techniques for building a strong financial house. Can you talk to us a bit about what those techniques are?
Sure. So I think the first technique is really focused on intentionality. And so I have some worksheets on my website, some goal planning worksheets that are also in my book, Making Money Simple, that really force you to be very intentional with both your savings and your spendings. And so I think a lot of times personal finance content, financial advisors like myself focus on the saving and investing side, but also trying to align your spending with your values. So there's an abundance of research that shows that experiences generate more happiness than stuff. So if in your goal sheets, you have something like a huge vacation with friends or a 5-year anniversary trip or something like that, and then you have a flat screen TV, I'm going to be encouraging you to take the trip. And the research shows that even an elaborate date night can have more lasting happiness than a brand new iPhone. And so I think that experiences over stuff is an important piece of it on the spending side. And there's stuff like purchases that create time or, finding ways to make things a treat. So within that intentionality, within the savings plan, it's really writing out goals, being very clear what they are and what they're going to take so that you know what you're doing. So that's the first piece. A lot of times I say like financial success isn't magic. It's just simply engineering. And so with that intentionality piece, you're really laying out the plans for what you're doing. The second crucial step I would say is automation. And automation was hard when I came out of college in 2007. There were ways to automate your finances a little bit, but not nearly the way that you can today. And the most obvious form of automation is when you contribute to your retirement plan right out of your paycheck. You can move money automatically to banks, to HSA accounts, to IRAs, to college savings accounts, to auto payments, mortgages, bill pay, everything. Everything can be automated. I mean, even if you have rent, a lot of landlords will happily take an automated rent payment. So I think that automation is the second crucial piece. And then the third is investing. And boy, I mean, we could talk for like 5 hours and then take a little break and then talk for another 25 hours. But real key to investing is, first you're trying to save enough money for something. And everybody wants to retire at some point. And retirement may mean a lot of different things. It may be one long 20-year vacation. It may be just having the financial freedom to do whatever it is you want. I mean, I think a lot of people in our generation envision working later and just doing work they really love. But how do you get to a financial place where you can do exactly what it is that you love? And investing kind of equips you to do that. So really, you're just trying to outpace inflation because you can't just save in cash. It won't work. The problem with investing is that we are hardwired to make poor investment decisions. Everything in our DNA goes against what good investing would be. The patience and discipline and removing emotion from decisions when there are highly emotional events happening, it's really difficult. And so I do spend a lot of time in the book talking about that. I do try to write a lot of content about stay the course, know that market downturns are going to happen. I mean, heck, I got out of college and the market dropped 60%. I mean, that's a lot of money. Now, fortunately, I didn't really have any money at that time. So maybe it's scarier when you have a lot of money to lose 60% of it. But in reality, 10% drops, 20% drops, they happen all the time. And that's what makes investing give you higher returns or these losses. There's a lot of components to that third crucial step, that investing step, that makes for successful investing. But I do think some of those basics you can learn from a lot of good resources. Hopefully, I've added to that list of good resources out there.
That's all for this episode of Millennial Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.